So your first choice, accept it. Yeah, the 16.5%, it is the rate that you need to use. And remember, the 16.5% is applied to your gross turnover, not your net turnover when working out the VAT that you pay over to HMRC. Obviously, the headline rate of VAT is 20%, but that 20% is calculated on the net. So we're not comparing 20 and 16.5. You'll see the difference when we come down to the figures at the bottom of the slide. This choice, accepting the new rate and doing nothing, will only benefit you if you have absolutely no input VAT on the things that you buy. So if you're not going to have any valid input claims at all. Because if you apply this 16.5% to your VAT inclusive turnover, you will see in the figures below, you're only going to save literally a few quid. So we've got an example here. You've got an invoice that you want to raise to your customer, your agency, of £1,000. You charge VAT still at the 20%, 200 quid. Your invoice is £1,200. You then apply the 16.5% to the total invoice value. So the VAT that you pay over is £198. So your saving on the flat rate scheme is a whopping 2 quid. And that is assuming that you don't have a single penny of input VAT to claim. So you can see, even on this little example, that even if you've got, even your accountancy bills, you know, they're going to be, I would suggest, have VAT on them that's going to outweigh the benefit of being on this 16.5%. Yeah, does that make sense to everybody? Is that all right? We at Meads Contractors have taken every single person off of the VAT flat rate scheme, because it's just not worth it, even just because of our fees, the VAT on our fees. It's worth them coming off of it and claiming that. Is that all right with everybody? Right, your second choice, leave the VAT flat rate scheme, which is what we have done for all our contractor clients. We have written hundreds of letters to HMRC asking to remove all of our clients off of the VAT flat rate scheme. It is the only way you can come off of the flat rate scheme. So if your business does fall into this limited cost trader category, but you're incurring VAT on your expenses that you want to reclaim, you will definitely benefit from reverting to the standard accounting for VAT. All right. Like I said, you can come off of the VAT flat rate scheme by writing to HMRC. However, you can only come off of the VAT flat rate scheme, beg your pardon, if you decided suddenly you wanted to join it for some reason, you can't chop and change between VAT periods. You have to stick with one for at least a period of 12 months. So 4 VAT returns, so you can't sort of chop and change. If you've only just gone on to the VAT flat rate scheme, I think you would have to have stayed on it for 12 months before you can deregister and go on to standard rate. If I just give you an example, my husband was on the VAT flat rate scheme. He's not a contractor, but he was using one of those percentages, and he is a limited cost trader. I wrote to them on the 1st of March. They received the letter, they said, on the 3rd of March, and they actioned the letter on the 17th of March. So if that just gives you any indication of the turnaround time, you know, you need to think about sort of 2 weeks, just over 2 weeks before they actually action your letter. All right, just a bit of guidance, and hopefully we will receive a letter saying that they've actioned it. That was just verbal, I got that confirmation. However, coming off of the VAT flat rate scheme does mean that you're going to start reclaiming input VAT, which you won't have done before on the flat rate, okay? In order to reclaim any input VAT on an invoice, you must have a valid VAT receipt or invoice. The reclaim, and I can't stress this enough, the reclaim of VAT without a valid document, without a valid receipt or an invoice, is VAT fraud. And HMRC, particularly the VAT men and women, are horrible. Sorry if anyone's ex-VAT. They are really, they're like vultures. They're not nice people. So you've got to get it right. And of course, if you think about it as well, if everybody is switching over to the standard accounting method for VAT, you imagine the amount of investigations that are now going to go up, which is exactly why they brought the VAT flat rate scheme in the first place. So it's just, it's crazy in my mind what they've done. It just makes no sense, because they're now going to have people making mistakes on their VAT reclaims. So I talked about the importance of a VAT receipt or invoice. What constitutes a valid VAT receipt and an invoice? And this next slide is really, really important. This is a typical invoice or a receipt. I've just mocked one up for me as contractors, okay? And I'm just going to go through the things that you absolutely must have if you want to reclaim VAT on an invoice or a receipt. However, this only applies if the purchase is £250 including VAT or more. I'll talk about less than 250 in a bit. All right, so this is for your full-blown invoices. All right. Your company's name and address must appear on the invoice or the receipt. Absolutely must. And if you are a limited company, it's got to be blah, blah, blah limited. It can't be you as a person. It's got to be the limited entity that is VAT registered. Yeah, that's really important. So for example, this is a cracking example. If you'd been on the flat rate scheme and you were still claiming your mobile phone bill as a company expense and it was in your own name, if you now want to which isn't, I mean, it's not great, but it's not horrendous. You can still partially claim for a personal mobile phone bill through your company from a corporation tax point of view. But if you want to start reclaiming the VAT on those invoices, you have absolutely got to change that contract into the limited company name. Is that all right with everybody? Yeah. The price per item must be stated on a receipt or an invoice, as must the quantity of each item that you're purchasing, each good or each service. A description of the good or service must be included, and the supplier's name and address must also be included. The date and the tax point must be on there. They can be different. It's very unlikely. Technically they can be, but it's very unlikely, okay? Because that's the date that HMRC will look at from a VAT point of view as to which VAT period the invoice goes in. They must have a unique invoice number that runs sequentially. That's important as well, a reference of some description. And the supplier's VAT number must be stated on the invoice or the receipt. The total VAT charge has to be on there, as does the rate of VAT charged per line item, because you could have, like in this example, different VATable rates within one purchase. So you might have some exempt supplies on there, you might have some standard rated supplies, zero rated supplies, there's lots of different rates out there. And finally, you must have the total excluding the VAT. So, if you're doing your own bookkeeping, you must make sure that any receipts or invoices over £250 have all those things on if you want to reclaim the VAT. All right, over £250. If it's less than £250, they're the only details you need. Because if you imagine if you just go into Staples and buy a bit of paper, some pens, printer cartridges, they don't ask you what your company's name and address is. Although I think PC World used to actually. They're just going to give you a receipt off the till. Yeah, some places do ask for your details, but generally you're not going to get your company's name and address on that receipt. And the split or the breakdown, the details doesn't have to be quite as explicit as as for a purchase over £250. You just need the total amount charged on the invoice. You don't need all the breakdown. All right. Your third choice, deregister for VAT. Simple. If it's just too much hassle for you, if you're doing your own bookkeeping and you just think, do you know what, I haven't reached the VAT threshold of £81,000, I just can't be bothered to be VAT registered anymore, I'm going to deregister. That of course is an option to you. Personally I wouldn't do it, but then I'm all right at my own bookkeeping. But it might be an option if it's just too much hassle for you. Obviously you will be losing out on the reclaim of all that lovely input VAT. But it's about, you know, it's weighing up the pros and the cons of any situation, and it just might work for you. It also might make you cheaper if you're supplying to customers who aren't VAT registered themselves, so you might get more business. It all depends on your personal circumstances and what you want to do. Obviously, if you're voluntarily registered. If you're not voluntarily registered, then you can't do that.